Hello students, welcome back to another short lecture over Chapter 25, Differential Analysis and Product Pricing. So by now all of you should have already read the chapter, and we are basically in this particular example that I'm going to cover next, we will continue covering differential analysis, and basically we're using differential analysis to make decisions, okay? Each analysis focuses on the differential effects of revenues and expenses that will yield either a profit or a loss, and then that's going to make us decide the alternative course of action to take between the different options. Okay, so the first exercise that I had gone initially over was selling versus leasing. Now, the second problem that I'm going to be covering over is making versus buying. Okay, so you have a business and you're buying maybe some kind of an item. You know, it could be a case, it could be a component of the product. So you have the option of maybe you can produce it. You know, would it be cheaper for me to make it myself, or should I buy it from an outside company or from another vendor? Okay, so those are the decisions that we have to make. So in this case, we have a make or buy decision. Okay, so here it says Somerset Computer Company has been purchasing carrying cases for its portable computers at a purchase price of $24 per unit. Okay, so we decided, you know what, we're not going to go through the hassle of making the cases, we'll just buy it from someone else. Okay, and we're going to pay 24 bucks for them. Okay, the company is currently operating below full capacity. Okay, charges factory overhead to production at the rate of 40% of direct labor cost. The unit costs to produce the comparable carrying cases are expected to be as follows. So we have some space or some capacity in the manufacturing process, and we are thinking that instead of buying the cases, we can manufacture the cases in-house. Okay, so we have to decide what's the best option. Should we continue buying them from another vendor, or should we start making them in-house? Okay, now if we do decide to make them in-house, we're going to be spending $8 in direct materials, $12 in direct labor, and $4.80 on overhead for a total cost of $24.80. Okay, so if we make them, it's $24.80. If we buy them from someone else, it'll be $24. Okay, if Somerset Computer Company manufactures the carrying cases, fixed factory overhead costs will not increase, and variable factory overhead costs associated with the cases are expected to be 25% of the direct labor cost. Requirement A. Prepare a differential analysis dated April the 30th to determine whether the company should make alternative 1 or buy alternative 2, the carrying case. Okay? So I've got my differential analysis, make or buy decision, and this is dated April the 30th. And now in this case, I've got my unit cost. Okay, we're going to break them out. Okay, the first option we have is if we purchase the case from an outside vendor. Okay, if I purchase my case from an outside vendor, then my make would be 0 because I'm not making them, I'm buying them from an outside vendor. So if I were to buy them from an outside vendor, how much would I be paying? Well, I'll be paying $24. Now, this number is going to be negative because I am paying. Okay, I am paying for the case. So this is money leaving the company. Okay, you're paying for a good. Okay, so it'll be a negative. Now you're going to compare your first option, your alternative 2 minus your alternative 1, and it'll give you a negative 24. Now, that's the option if you purchase it. If you purchase it, you pay $24. Now, if you make it, you're going to have some components to it. You're going to have your direct materials, okay? If you make the case, how much are you going to spend in materials? Well, I'm going to spend $8. It's right there. And I'm putting it in minus because I'm spending. These are costs, okay? Because you are making it, the buy will be 0, and then we can compare. Okay? Now, we're also going to have direct labor. If you make it, if you make the case, you're going to have to spend on labor. And according to the problem, you'll spend $12 on labor. Okay. And then you compare your, let me see. You compare your alternative 2 with your alternative 1. equals that minus that. Why doesn't it want to work? Let me see. Yeah, it's in accounting format. Okay, that should be 0, 0. There we go. Okay. Okay, now we have overhead. Now we have two different types of overhead. We have variable overhead and fixed overhead. Okay, so we have variable and then we have fixed factory overhead. Okay, now the problem tells you that your total overhead is $4.80. Okay, we need to split that $4.80 into fixed and variable. Okay, so let's see what it says. For the variable component, it says if Somerset Computer Company manufactures the carrying cases, fixed factory overhead cost is not going to increase. So meaning we already have a fixed overhead cost when we buy the case. That fixed overhead cost that we have when we buy the case will apply for when we make it. Okay. Now we are going to have an additional variable overhead cost associated with making the cases, and that's 25%. Okay. That's 25% right here. 25% of the direct labor cost. So your variable overhead, okay, factory overhead is going to be equal to the, it says 25% of your direct labor cost. Well, how much is my direct labor cost? It's $12. And it's 25% of that, so we multiply it. And let's see what we get. So it'll be $12 of your direct labor times 25%. Golly, there we go. That gives me $3. Okay? So your variable factory overhead is $3. Now we can calculate our fixed factory overhead. Well, if I know my total overhead is $4.80, okay, and I know my variable overhead is $3, then that means that my fixed overhead is going to be $1.80. Okay, so we've figured out our variable overhead by getting, it says here that it's 25% of your direct labor cost. Your direct labor cost is $12 times 25%. That gives me $3 for your variable. Okay. Now for the fixed, regardless if you make the case or buy the case, you're going to have a fixed cost. And that fixed cost we calculated by getting our total factory overhead of $4.80 minus my variable overhead of $3 that we calculated. That gives me $1.80. Okay, so that $1.80, you're going to have to pay it whether you buy or you make the case. That, it says here, the fixed factory overhead cost will not increase. Okay, so it'll stay the same at $1.80. Okay, so now we compare alternative 2 to alternative 1 for both categories. Okay, and now I can calculate my total unit cost. So you basically add all of the information in the column, okay, to get your total. Okay, so if you make the case, you're going to waste or you're going to spend $24.80, okay, in material, labor, and overhead. If you buy the case, you're going to spend $25.80. It's $24 that you're paying the vendor, and it's $1.80 for the fixed overhead cost, okay? So if you're looking at this information, now we are being asked to respond to requirement B. On the basis of the data presented, would it be advisable to make the carrying cases or to continue buying them? Explain. So this is requirement A. And over here I'm going to put requirement B. Okay, so on the basis of the data presented, would it be advisable to make the case or to continue buying the case? Okay. Assuming there is no better alternative, uses for the spare capacity. Okay. over here. It would be advisable to, what's the best option? And which one are we going to spend less money? Now we're looking at costs. Okay? The other one we were looking at profits, we were looking at the higher profits. This one we're looking at unit cost. So we want to spend the less money possible. So the one that yields the lowest cost is your making the case. Okay? So it would be advisable to manufacture the carrying case because the cost savings would be $1 per unit. Okay, so one's $24.80, the other one's $25.80, so it'll just be cheaper if we make the case. Okay, the fixed overhead is irrelevant because it will continue whether the carrying case is purchased or manufactured. Okay, so assuming there is no better alternative, we only have one of these two options. Okay, and we're going to use the extra capacity to make the carrying case. We can, when we're analyzing the information, we know that it's cheaper for us to make the case. We'll spend $24.80 versus $25.80. Okay, so we're going to have a cost savings of $1. The fixed overhead is irrelevant because it will continue whether the carrying case is purchased or manufactured. So regardless whether you make or buy the case, you're going to spend $1.80 in fixed overhead cost. Looking at the scenario, once again, it's a better option to make the case. Okay, so this is another wonderful example of comparing or doing analysis, differential analysis. Okay, we have two options. Which one is the best option for us and why? And we have the support that we did, the analysis that was done to come up with a decision. Okay, so that is the second problem that I'm going to be covering in this specific lecture. If you have any questions, please do not hesitate to reach out to me. Okay, thank you.